The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Mark and Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning?
Pretty good. Can't complain. So far, no hurricanes for Florida, which
Well,
is
that's good. That's good.
Yes.
I have been watching the commodity market here. Last week we saw a good run up. This week we've seen some choppy trade back and forth. I guess, Shawn, as you're looking at this, what are your thoughts there, and where do you see stuff heading as we head into that early, late pollination period, and then looking into beans right now?
Well, I mean, commodities got hit really, really hard here, like a mini crash. They've been unwinding the yen carry trade, which is borrowing money in yen and buying AI stocks and precious metals and oil. And so there's been a huge liquidation event in all those assets. And I think that has a little bit further to go. We think we might need to get ourselves more into mid-August before this spread trade unwinds itself completely. And then we can move on to some different forces. Obviously, the Federal Reserve meeting is today and tomorrow. We've had a lot of weak economic data, and it is expected that they will either lower rates tomorrow or indicate they will lower rates in the September meeting. And to the extent that if that's correct, then we might finally begin the rate reduction cycle, which would have the opportunity of lowering the US dollar, which of course is something that helps US based commodity prices and agricultural prices get more inflated and increases our export business. So that's a big deal. And we'll have to see how that plays out on Wednesday when they come out with their communique in the afternoon. So,
okay, that's a big deal too, because this is for the first time since the Fed has been, having these meetings and whatnot. I mean, I think the Fed's been seeing things along the way, but this is the first time where two consecutive months in a row when it came to consumer indexes and those kind of things, where we saw slides down in that, and then also on the job side of things, we've seen job creation dip to well below what expectations were. So a little fueled with fire there.
if you take the job creation that the government is creating by spending crazy amounts of money, the private sector is not doing well at all. And you look at the price of copper, which typically is very sensitive to economic activity, dropping from $5 to $4 in a very short period of time. You're looking at crude oil that's dropped $10 in a very short period of time. We're really, you're seeing housing activity at the lowest levels since 1995. We are seeing pockets of crashes in places like Nashville, for example. We're seeing prices all of a sudden out of nowhere start to fall as people who haven't been selling because they don't want to lose that 3.5% mortgage rate. At some point, though, if you lose your job, you have to sell.
Yeah.
And if you have to sell, you got to find where the buyer is. And what we're finding is the buyer is nowhere near what the market says it's at. So to me, when you don't have any movement, when you don't have any volume, you don't really have a price. So cars are getting backed up. Can't get rid of them. I don't have to tell you what's going on with farm equipment. You know that better than I do. Just things are getting gummed up. And so, there's supposedly a dual mandate. The dual mandate for the Fed is to try to keep inflation in a comfortable range and to also create financial stability and liquidity to the banking system. It looks to me like the risks right now are shifting away from inflation towards the economic side, and I think they're going to act. I think, and we have this political election coming up with great uncertainty, and I think they didn't like how Trump treated them the last time, and I think they would like Kamala, whoever or whoever else is going to be the ones in power. And I don't think you want a crashing economy going into the November elections to get that side in. So these are just some of the things that I think about.
Yep. So you brought up a pretty good point there when you looked at what the Fed is doing and what their mission is, right? As you're looking at, let's step back here a little bit. So as you're looking at, this is a question I get asked a lot, and the question I get asked a lot is, "Hey Casey, we're looking at used equipment things. When's this bubble? When are we out of this area that we're in, this downturn that we're in, going through in the farm equipment business, which large ag equipment industry is completely tied to what's going on in corn and bean market, right? Doesn't really matter if that's going out everywhere else, but when you're looking at low $4 December corn, or even even when I had a 3 in front of it, nothing's happening, regardless of what happens with interest rates. Right. I guess, Shawn, as you're looking out right now, my feeling is, just on the equipment side of stuff and working our way through everything, we're looking at late 26, 27 before we get out of this what the new normal looks like in the equipment business. As you look out long term, what are your thoughts for how the commodity market plays out, and with interest rates? Because that's also a big anchor around everybody's neck when you look at at lines of credit and everything else that come into play with that. But I guess as you're looking at this, what are your thoughts?
Remember, ag prices go up, and then equipment goes up a year later. I mean, there's a delayed reaction to when the farmer gets the money to when they're going to spend the money. Yep. Same thing for seed. Same thing for fertilizer. I mean, go down the list.
Sure.
So 26 would mean that we would expect to see a rise in price. Doesn't mean back to $7 or $8, by the way, but something more profitable in 2025 is what it would mean. Mm-hmm. We know at the lows, everything fundamentally looks absolutely horrible. That's the definition of making a low. Right. Nobody sees anything good. So we've tried to develop forward-looking tools that typically give a good read on when the forward fundamentals are going to be improving dramatically, even though today nobody can see why. All the market does is look what's straight in front of them and what's already happened, and they keep telling you what's in front of you, what already happened. Somehow everyone doesn't seem to think that other people don't already know that, but they keep telling people, and that's the market, right? Right. Oh yeah, we got a big crop and exports have been terrible. Big crop and exports are terrible. Well, okay, we know that. That's what you should have been saying back in the spring when prices were higher, not now. So one of the tools that we have found to be incredibly valuable in picking these important low points is something called the relative value of a particular commodity to overall commodities. That is to say, the price of corn to the Goldman Sachs Commodity Index, or the price of corn to the BLS Cash Commodity Index. Everything trades relative to everything else. And so long as you have a market that's still viable, it only tends to get so cheap relative to everything else. And then the market will correct that imbalance. Right now, corn, soybeans, and wheat are trading in the top 2 to top 3 cheapest markets over the last 25 years relative to all other commodities. So when market is too cheap, that means planting is going to fall. Inputs, we just talked about it. Farmers are going to spend less on their crops, which means yields fall relatively because they're not putting as much fertilizer down. They're not maybe buying the best seed they can buy. They're not, getting the most modern equipment. They're going to crimp. They're going to tighten the belt and try to get away with as little as possible. We know when prices are attractive, buyers will buy more. That's the definition of supply and demand and the elasticity of it. When a cattle producer is looking at $3.75 cash corn, is going to be much more excited to buy a lot more corn there than it was $7.75. So all of those factors are built into the relative value price. Good things happen to cheap markets. Bad things happen to expensive markets. And right now, the grain markets are extremely undervalued. They can stay there for a while, but we did an analysis going back 45 years of every time that we've seen grains getting this undervalued relative to all other commodities. And when did we actually confirm a bottom in the market? Or doesn't mean rip-roaring, gapping up, but when did we start to turn up and verify that a floor price was established? On average, it was 30 to 60 days from the time that you establish that undervaluation. So if you look at the valuation that we just got to here, it suggests somewhere between the end of August and the end of September, based upon the history of relative value, we would expect the markets to start turning up and confirming a floor price that we've established. What happens usually when you come out of that, it's slow and steady in the beginning. It's gradual. And then all of a sudden, it's all of a sudden, meaning that you kind of work your way out. It's a grinding market. It's nothing too exciting. Everyone's still bearish. And then something happens that really shoots you out and changes re-rates the market, whether that's a weather anomaly, whether that's a currency anomaly, whether that's a political anomaly. We don't, or it's something we don't even know yet. I mean, obviously there's things that continue to happen in a black swan type of situation where we we have to react to something we didn't expect to see. We can't predict those things, but we do know that that can happen. So I feel really, really good that where we are now is in the bottom of the ninth inning of a 2.5-year bear market and overall grain market price declines. And we're getting ourselves in a position to establish a final floor. Obviously, we're still trying to do that. We can argue it's 10 cents lower, 20 cents lower, or at the bottom. I mean, we can all speculate what that is, other than to say we're at the very end of the process, not the beginning of the process. Our work on inflationary periods for commodities, which we think began during the COVID lows, is that you tend to have a 2.5 year rise, a 2.5 year fall, a 2.5 year rise. You look at the 2000s, you look at the 1970s, you look at the 1940s, you look at the early 1900s. We follow this pattern almost perfectly, and we're just completing a 2.5 year decline after over a 2-year increase. This cyclically, if we're correct about an overall inflationary cycle for commodities, would be the place that we'd expect the market to put in a floor price. We also look at things like capital flows. As you know, Casey, we've established what we call a smart money tool that looks at COT, commercials, speculators, processors, all kinds of different people, and we've measured this against open interest, and we've laid this out over a 40-year period. And there's times when the smart people, those that tend to buy the lows and sell the highs, get to a level that has been fairly highly correlated with either a top or a floor price. So right now, those readings in corn, soybeans, and wheat have reached levels that have been historically associated with the early establishment of a floor price. We would never, ever only use one indicator and say that's the one to use. We always try to use multiple highly correlated indicators. And when they all are starting to rhyme, Casey, and give us a similar up or down arrow, then our confidence grows. Still never 100%. There's still never 100% anything, no matter how correlated or how many indicators you have, but it increases the odds. Right now, smart money is giving us that indicator. Relative value is giving it that indicator, and a technical tool we use, what's called relative strength index, the monthly relative strength index. You typically will only get oversold in that indicator a couple of times every decade. We are now in oversold territory in corn, soybeans, wheat. It's another highly correlated indicator, and there's others that we use. The bottom line is, I feel, that we, markets tend to make a low, we bounce, and then we tend to do some kind of a retest low. So what have we done? We made a low in July, we had a bounce, and now we're doing a retest. Sometimes a retest goes to new lows, like soybeans have made new lows. Sometimes they make a higher low. So far, wheat's at a higher low. So, it looks like corn's going to do a full retest. We'll just have to see how all this plays out. But that's where I think we're at. And then, so if I am a livestock producer, if I'm an ethanol producer, if I'm a corn syrup producer, if I'm a renewable diesel producer, if I'm a bean crusher, I would be looking at ways to increase my cash length in the market and look at ways to protect upside price risks over the next 30 to 60 days. I think this is a place where, like we had back in 2020, where you can lock in a very exciting long-term economic advantage on the physical buy side of the market. And right now, that's, to me, the smart thing to do in the market. If you're a producer, I'm going to say the same thing I said back in 2020. If you didn't sell enough in the spring highs, or you don't have storage for all your corn, or you have to sell because of cash flow needs, you sell what you got to do. I mean, you have to keep the farm going, but this is a time to sell as little as possible, cash sell as little as possible in the marketplace, and store the rest. I believe there'll be a better opportunity to sell cash corn, cash wheat, cash soybeans later on in the year than we currently have. We did make our strong cash recommendation in grains back on our May 13th report that we put out to our subscribers. That was within a couple of days of the highs. We're very lucky with that, but made that recommendation. And this is just not the time to be booking revenue. We just feel that if you're overselling now, you're doing the classic scenario of selling at the harvest lows and locking in the lowest income possible on the farm. And we want our customers and those watching your show to prevent doing too much of what we consider to be bad business.
Right on. Okay. Hang on a second. We'll edit that part out, Shawn. Okay, so let's talk a little bit about Tropical Storm Debbie as it bears down on. It's out in the middle of the Atlantic right now, making its way through through the area. Of course, when you look at the map, they have a giant blob around Cuba, Dominican Republic, basically Florida, and 200 or 300 miles in every direction around it. So talk a little bit about what's going on there as you look at that situation, assuming that it develops into something greater than what it is right now. You talked about earlier that earlier when we started talking about weather events, what it might look like, that we would see an above average hurricane season this year. Most of those hurricanes landing inside of the Gulf of Mexico. So I guess, Shawn, as you take a look at this one, what are your thoughts right now?
We felt that most of the Atlantic based, which this one would be, are going to turn out into the ocean because the Bermuda high is too far east and too far south. And so what happens with these storms that come off of Africa, they'll just going to follow the ring. They follow the ring. And if you look at this, it's going to follow the ring. And it looks like it's just, it's going to, kind of follow the coastline, but I don't think it's going to be an impact one because like I said, the Bermuda high is just too far east. And it's going to keep, you need the storms that we want to worry about are really not the storms that are really coming off Africa. It's going to be the storms that develop in the Caribbean. They develop in the Bay of Campeche, even develop in the southern Gulf of Mexico, because the waters are very warm. The shear is very low. And that's where I think that the development, remember, peak hurricane season, 88% of all hurricanes form between August 15th and the end of September. So we haven't even gotten really. I know Beryl was one, but I mean, we don't usually get too many this early.
Right.
The hurricane season really haven't started yet. It starts really middle of August. We're still 2 weeks away from peak, starting the hurricane season really. So I would expect that to be an ongoing thing. But I don't think the Atlantic storms are going to be a big market mover or a big story this year. I just don't see how, unless there's a dramatic change in the Bermuda high, which usually there's not. Once the Bermuda high fixates itself to where it's at, it doesn't typically change too much throughout the season. I think it's going to stay there, and I think it's going to steer most of the storms away from harm's way. The other factor, Casey, that an eastern positioned Bermuda high does is it creates a lot of Saharan dust. And so we've had a lot of Saharan dust that's been pumped up into the atmosphere, which also reduces the risk of those Atlantic-based hurricanes from gaining strength, because what sand in the atmosphere does, it dries the air out. A storm feeds on moisture in the atmosphere. If you don't have moisture in the atmosphere, it's like cutting off an artery to it. It's hard for it to get going. Another reason that I'm not anticipating Atlantic hurricanes to be a big deal this year. That dust tends to dissipate as you get to the Gulf of Mexico most of the time. And so there's a greater opportunity for storms to find that moisture with very warm sea surface temperatures to fire up. So I still feel the preponderance of hurricanes and threats and such are going to be that Gulf of Mexico, like Beryl was, Texas, deep south, Southeast. I just think that's going to be where, if we're going to get a couple of big impact storms, that late August to late September timeframe, I would be looking at the Gulf of Mexico, especially Texas, deep south, and southeast, depending on exactly where the curvature takes place. Texas, in my opinion, I think looks to be the bullseye this year more often than not. And Beryl certainly did that as well, by the way.
Right on. Okay. All right, Shawn, probably a good place to stop there. Folks want to reach out to you, get more information about what you're doing over at Hackett Financial. What's the best way to do that?
We have a website, Hackett, Hackett, advisors.com. We also have a Twitter page at Faradex11. We also have a LinkedIn page. We don't sit in front of the computer posting every hour because we have nothing else better to do with our lives. We're not one of those. From time to time, we'll post a few things, a few interviews. We actually work and try to do well and figure things out. And that means not spending time on social media. Having said that, we do put some stuff out there that some of the people that listen to your show might be of interest to go to those places.
Shawn, appreciate you being on the podcast, man. We'll catch you again next time.
Sounds good, Casey. Talk to you soon.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the YouTube channel, which is the Moving Iron Podcast YouTube channel, where you can see the video version of this podcast. Go to movingironllc.com for everything Moving Iron related. And while you still can, go to TikTok and check us out there at Moving Iron Podcast. So with that, I'm Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.